our next segment, which is Following the Capital, Investment Trends Shaping Running. Delighted to welcome someone who needs no introduction again, Alessio Punzi, Head of Road Running and Mass Participation at World Athletics, and Denis Cranstoun, who is the Director of Oberon Securities and co-founder of TrackCred. Denis, wonderful to see you again. It's been quite a number of years, but so great to have you on the screen. And I'm going to hand you over to the safe hands of Alessio to take us through the next 20 minutes or so. Over to you two.
Thank you. Thanks very much, Chris. Alessio, good to see you. Let's dive right in.
Good to see you indeed. Good to see you indeed, Denis. This is one of my favorite type of panel, one in which I know something, but very little about it. Yeah, on the other side of the line, there is someone very knowledgeable, so the conversation will hopefully be interesting for us as well, for the 100+ people still online with us. So Denis, I've been knowing you for quite some time on TrackCred, but not everybody might. Who are you and what is TrackCred and why are we having this conversation today?
Sure, absolutely. Well, let's start with TrackCred as pertinent to the subject of this conversation. And we have some time. I'm happy to talk a little bit about my background. But my background, just in short, is at the overlap of technology, finance, and mass participation endurance sports. So I'm excited to be here. Thank you for having me. TrackCred is a network for investors, founders, and operators in human performance and endurance sport. We operate at the intersection of activity, technology, and capital. We constantly talk to entrepreneurs, capital allocators, and executives, from race directors to brand executives to large incumbent and non-endemic corporate partners in the space, and acquirers in the ecosystem. My full-time job as an investment banker is in sell-side M&A. And so I get a 360-degree view of the space through my founding of TrackCred as a platform for the community and through my work as a sell-side banker. And something that is unique to us and that I wanted to share based on a comment that I saw in the chat actually just a few minutes ago is that innovation is not in the lab and it's not for our purposes of our community. It's not in elite performance. We work specifically with innovation that comes out of elite performance that then trickles down to the mass population, gets adopted, and then helps our companies scale and investors in those companies grow with that. And so we ask that companies in our community have a product when they come in. We put it in the hands of our members, who are most of whom are accredited investors, angel or professionally, who then and they're avid runners, cyclists, etc. So they get to try the product and get to give us their input that way. So that's a little bit about TrackCred. One important thing is we also have a pretty good view into what doesn't work. So we keep our conversation honest. When we do case studies at our events for founders, we ask that they share what has not worked as well. And so that is the value that we bring to the community, is that 360-degree independent view of innovation, what works, what doesn't, what scales, what doesn't, and what investors should be looking at.
So Dennis, you have seen stuff and you are seeing stuff. Me as a profane of the industry, as an outsider, I mean, inside of the running industry, but definitely an outsider in the investment sector, I do see from newsletters, from LinkedIn posts, from anecdotes, rumors, that the running sector, broadly intended, as both events, human performance, food supplements, technology, AI platforms, registration systems, etc., is attracting an increasing number of eyes, increasing number of more and more interest. Is it just my bias, or is this really happening?
It's absolutely true, and I agree with you, and that is, again, the premise for doing everything we're doing. If you look at what has happened over the past decade, running has shifted from a lifestyle category with disparate and somewhat loosely related or completely unrelated verticals of hardware, software, apparel, nutrition, payments, registration systems, and so forth, into a cohesive ecosystem. Where everything is connected, both in the physical sense, in the digital sense, but also in the proverbial sense. So we also look at the sheer size of the industry, and we see estimated $400 to $800 billion of economic impact. if we
Say that
look at
again.
everything.
Say that again.
It's
400 to 800.
400 to 800 billion of total addressable market, and I'm happy to share our data. It sounds, a bit aspirational. We have this data backed by sources. I'm happy to share it with anyone on this webinar and beyond. But it's everything from apparel and footwear down to smaller categories like B2B software for operations. And we'll touch upon that again because it's a very important, fast-growing segment and actually directly relevant to the race directors on this webinar and other players in the ecosystem. But just the tech segment alone within that is somewhere in the range of 100 to over $200 billion. And the total industry, again, is, and we estimate at 400 to 800 billion.
How much of that is events, if you have figures?
Events, including registration participation fees, is about just over 20 billion at this time. And it's growing fast as well. So at about 8% compound annual growth rate, we expect that to double over the next 10 years.
Wow.
And within that, the specifically fast growing segment is ultras. It is small by the standards of the global economy, but it's a $3 billion industry growing at 9% CAGR and at a compounding rate that gets us to doubling within the next 8 years.
But Dennis, are there, in your opinion, easily understandable pockets of scalability specifically in the events industry, with few exceptions? The market is very fragmented, just because, as we often say, it's the city that owns the marathon. It's not a franchise that you can easily, spread across the country or even across the world. Guide me through the thought process of an investor thinking, okay, this marathon, this series is worth investing because maybe I can grow by, acquiring other races, or maybe we can create vertical integration, acquiring registration systems, photo services, and whatnot. Help me understand that.
Absolutely. So, and maybe it might be helpful to take a step back and kind of talk about what an investor means. There are different types of investors, and this is something that came to me on the way into the office, that it might be helpful to do just that. So, their friends and family and angel, just going sort of looking at the life cycle of a company or an event entity, if you will. Friends and family angel investors is first money in, and they back the founder personally, which some of the institutional investors take a very close look at as well, to be clear. But those are basically your supporters, your champions, who give you money with little expectation of financial return. Then from there, very quickly, we get to institutional investors like venture capital investors, the likes of Andreessen Horowitz, the Sequoias, the TCVs, Dragoneers, Jackson Square Ventures, the last three being, of course, very prominent investors in Strava, private equity investors that we all know in this space, like Spectrum, that has invested into All Trails, like Providence, that invested into Ironman in 2008. Those are investors that have a full expectation of financial return. And the reason is, and this is hiding in plain sight for founders and other ecosystem players, not just in our space, but all across industries, and even in tech, is that they have bosses. They have to answer to their LPs, which are limited partners that are institutional investors in those funds. So their business model and their operational everything that they do is driven by the demand from their LPs to generate a certain return on their investment, and that what empowers them to have the funds to invest in individual companies. If you look at venture capital, your typical model is they invest in 100 different companies. 90 of them will go bankrupt. 10 of them will have some return, and one of the 100 will be the so-called fund returner with outsized return of about 100x the investment. It's difficult to get those types of returns in businesses that are events-based, that are services-based. It's a lot easier to get those types of returns in scalable businesses like software. And that's why you've seen the proliferation of software, both on the B2B side and on the B2C side.
You mean in the running industry? in our sport. Yeah,
Absolutely,
exactly.
absolutely. What the basic tenets of investment in general hold true for the running industry as well. So this is why you see success stories of companies like Whoop, like Aura, which are of course tangentially overlapping with our industry in a large degree, and with Strava, that is as well known, filed an S1 confidentially
Hmm.
and is looking to go public this year, and is working with the likes of Goldman Sachs and JP Morgan to take the company public at what is expected to be about a $3 billion valuation, which would be a significant return
Hmm.
to the institutional investors into Strava.
And specifically, besides IT and technology-backed sectors, what else is hot in the running and endurance industry? I remember that at one of your one of your pre-New York Marathon events, we'll talk about that later. There was a lot of attention on biomarker and human performance. Is that a thing?
Yeah, absolutely. If we want to see, look at what is trending now and what will be trending for years to come, there are a couple of very prominent trends. So everything that is community based that relies on community engagement is highly sticky in its nature and is highly appealing to investors. Everything that is built around recurring engagement, recurring being subscription-based businesses like Rana that was acquired by Strava,
Hmm.
like Strava itself, that is a category that is highly appealing to investors due to the just the unit economics of it, starting with a very low churn. Speaking of low
Hmm.
churn, there's an outstanding company in our industry that is a B2B software business that is Run Sign Up. That is well known for its and no relationship or of any kind to the company. I just wanted to call it out as someone who notoriously has customer churn in the low single digits. And of course,
Hmm.
things are changing, and there are people on this call who are competing directly with them and who may challenge those numbers or the fundamentals behind them. But that's something else that investors are looking at now. And fast forwarding into the current age of AI. Proprietary data is extremely important for a successful company that is being founded today that is looking to get financed and
What
looking to
exactly is
grow.
that? Help me understand.
That's it.
What is meant by proprietary data for this
So
type of
any
company?
any proprietary customer data set. So just taking a little step back. So here at Oberon, we focus specifically on data insights, analytics, and AI in terms of our M&A coverage. We published a quarterly report every 3 months. We take a deep, long look at what is happening in the industry, from macroeconomic trends to industry trends to transactions that happen in the industry. And what has been happening with AI specifically recently is folks are taking a step back from investing into anything that has an I label on it, anything that's just a simple wrapper in terms of a foundational LLM model and is rooted in industry expertise, proprietary first party data that is collected directly from the customer, and specific software developer expertise in AI or talent. It's really hard for our industry to compete on the third one, just simply because there's so much dry powder that goes to the likes of OpenAI,
Hmm.
Perplexity, and SpaceX in terms of just what they can afford in terms of hiring developers. But the first two are absolutely true. There's industry specific data, which you mentioned, biomarker data,
Hmm.
participation data, transactional data from the registration and payment systems. And if that is all anonymously tied into a single runner persona and paired with industry specific algorithms in the AI case, that builds a really compelling that gives a foundation for a really
Hmm.
compelling platform to be built. And if you look at the companies that Strava has acquired en route to its IPO over the past few years, you can see that they're building pieces of healthcare in recover athletics, runner engagement, and AI-driven training and runner technology that they did not develop in-house, and it was cheaper to acquire than to build in-house in FatMap. And so that is creating that vertical stack catering to a single individual that is a high spender that spends two to five thousand
That is the
dollars a
thing,
year.
Dennis. That is the thing. For many, many days, for certainly years, maybe a few decades, we've been touting this narrative of running being the most accessible sport. It definitely still is. All you need is a pair of shorts and trainers. Yes, but in reality, in mature economies, people are spending incomparably more today than even just 10, 15 years ago. We see that, and that is driving the prices of everything up, which isn't necessarily a bad thing. Actually, it's a good thing because more and more entities are coming into the sport, also attracted by the, as you say, recurring investments that runners make. But an unscripted question: if you are a race organizer, a successful race organizer, but you only have essentially one unique product, one type of product that you sell at what particular point in time, yes, you may get revenues 10, 11 months ahead of time, but you're selling one. How would you do about creating this stack that you just mentioned? What are the services can be provided?
So that's a great question, and I was thinking about that as well. I would look to partner with companies that have open APIs that are open to partnerships with races. One particular one, and look, again, this is no relationship with the company, but Movement has been on my radar recently as a company that uh, takes that extra step in collecting and analyzing consumer data, runner data in a way that some of their competitors do not. They're rooted in race registration, but they take the extra step to make that data actionable in terms of creating a long tail of commerce. That is actually one of my fast forwarding to what is
Movement.
appealing to investors today. Content to commerce is one of my personal favorite categories. There have been players on the investment side in the space who have come to me over the last several years who have invested in content to commerce platforms across other sports or other sticky human activities, and specifically look for that in running. Unfortunately, with the exception of a few well-known communities built around brands, that doesn't exist at scale in a way that's accessible to investors. But if I'm a race organizer, I want to partner with technology providers that will enable me to create that 365-day-a-year relationship with my runner and deliver value to the runner on a, if not on a daily, then on a weekly basis. That will allow me to facilitate commerce vis-a-vis that runner, but also collect data along the way that is then highly valuable first-party data that is, when it's aggregated, can be at the nucleus of my relationship with the runner going forward and my relationship with the partner brands, which is highly important.
So one important takeaway from this conversation, Dennis, is that race organizers are historically very good at focusing on consumer-facing side of things, great race, great experience, but more often than not, the technology stack is overlooked, and that is where the real value can be unlocked. Is this a fair assumption that I'm making?
Yes, absolutely. Look, and it goes both for their operating system backbone type infrastructure. So, registration, payments, and CRM, things that we're all know well and are used to. But also for for other additions to that stack that again would uh, dig into every touch point of the running economy, every type of good or service that the runner purchases 365 days a year. Just looking at Nike as an example, they've acquired over the years, since 2018, they've acquired Zodiac for predictive customer LTV analytics, a company called Invertex for fitting, company called Select for demand forecasting, and most recently company called Datalog, which is an AI native data integration across all their apps, across supply chain, across their IoT, all of their enterprise systems. And that's what drives customer stickiness and helps you monetize it at the end of the day. I'm currently in conversation with a stealth startup out of the Southeast that is an AI native inventory management system for small and large retailers and brands. And the amount of inbound interest that they're getting just based on the fact that they can not only help that ecosystem function better and smooth out some of the kinks in that relationship between the brand, the retailer, and the end consumer, but also create tons and tons of first party, second party data that can be acted upon going forward. That to me is a huge indication on what's to come. And last thing I wanted to say, I would love to talk separately about the convergence between running, endurance, performance, and healthcare,
And
because
hell, I
that
knew
is
you
a
would go
massive
there because
subject
I love it
we
too.
haven't even touched.
I knew you would go there. We don't have much time today, but certainly we can have more conversations. Dennis, explain in the final few seconds that we have, how can people join TrackCred and the events that you do before London, before New York Marathon, Boston Marathon? What are they, and why it makes sense for people just like I did to attend?
Thank you, Alessio. I want to stop short of, and I appreciate the opportunity. I want to stop short of putting up a full size ad at the end of this, but we are an open community to any founder, then that includes brands, races, any type of technology company that is aligned and a fit with human performance and endurance sports. We host in-person events at all major marathons. We have a continuity layer that connects all members of our organization throughout the year. And our focus really is not so much on thought leadership, and that's why I appreciate being included as part of this webinar today. We focus exclusively on facilitating commercial transactions, whether it be investment if you're an investor, fundraising if you are a founder, or a commercial partnership if you're a brand or an entity like a race. We are open to everyone to explore, and I'll share some links to do just that with Alessio and Chris, and everybody will be able to access it following this conversation.
Dennis, thank you. Happy summer and happy World Cup if you watch. Back to you, Chris.
Thank you.
Thank you.